how do you balance that if the Fed pauses now, 2 months of unleashing expectations that inflation remains sticky?
Well, indeed, we've started to see, you mentioned sort of the damage that potential, change in expectations, change in some of these yields can bring. We've seen that already. The front end, sort of like the 2-year, for instance, 2-year bond yields in the US, right? Record volatility. We've seen volatility is still at decade highs. We're seeing, like something on the order of 100 basis points move in the last, couple of weeks, where previously you'd see that over the course of months. So that's already unanchored, I think, a lot of the parts of the market more broadly, right? But I think conversely, you think about what's the signaling going to be from a policy perspective. How can central banks manage this? There's sort of a debate going on right now between pundits and analysts and central bankers alike, right? But is it possible to segregate, sort of maintaining balance sheets and the health of the financial sector on the one hand with one set of tools, whilst addressing inflationary concerns with another set of tools, right? So let's say an imperfect example would be the ECB. The ECB last week continued with a 50 basis points hike, as was expected by the markets and as this had previously signaled. Obviously, a fairly different set of domestic circumstances within the European Union, but they delivered on that hike while saying, actually the next hike will be data dependent. So kind of negotiating their way.
So ECB had very little time, to change the decision. I mean, it was like a matter of a few hours. So for the ECB to walk back may have been tough, but that's not the case with the Fed. The Fed has had a whole week to sit on this story, to digest the news and make its reaction.
And wouldn't that then bolster the case that the Fed would go 25 because that's what's basically been signalled, and because they've engaged in a lot of these other policy measures along with the FDIC, along with, the backstopping and the term lending facility, that could boost the case that you are going to see 25, and then they've got 2 months to think about it rather than 2 weeks?
Yeah, well, I think you're right there. In the sense that I think that's what the market pricing is definitely thinking about, right? That's why, Tanvir, you mentioned, about 75, 80% of a 25 basis point hike pricing. I think that's what the market is thinking about. But if you think about it from the analyst perspective, trying to cut through, all that noise and trying to figure out where the signals really are, what we're seeing is actually a huge amount of uncertainty. So one thing that I like to point out is that amongst, let's say, the economist communities, you see the most radical uncertainty you've ever seen for a Fed meeting we've ever seen this cycle. We have everything from a 25 basis points cut to a 50 basis point hike. No time in the last year and a half have we seen such a divided economist, consensus. And I think that's kind of, to your point though, there's a huge amount of debate about, how deep is this problem? How can we really address this problem? Are central banks addressing this problem correctly? How bothersome is inflation given these financial sector shocks? I think still all very open questions at this point in time.